India's stock market is often seen as a barometer of the nation's political climate. Election years in particular witness heightened volatility as investors keenly watch for policy shifts and potential reforms. The recent general election was no exception, with the market exhibiting a strong correlation to pre-election polls and exit poll predictions. This intricate link between politics and the market stems from the potential impact of government policies on various sectors, making investors sensitive to the political landscape. The outcome of elections significantly influences investor sentiment, driving capital flows and shaping market trends. A stable government, often interpreted as a positive sign, tends to boost investor confidence, leading to a surge in market indices. Conversely, political uncertainty or a fragmented mandate can trigger market volatility and a cautious approach from investors. This dynamic interplay between politics and the market underscores the importance of understanding the political landscape when navigating the Indian stock market. The recent election results, projecting a clear majority, have fueled a wave of optimism in the market. Investors have interpreted this outcome as a sign of political stability and a mandate for reform, leading to a surge in buying activity. This positive sentiment is reflected in the impressive performance of key market indices, indicating a renewed confidence in India's economic prospects. As global investors closely observe India's political developments, the market's reaction to the election results highlights the country's attractiveness as an investment destination. The perceived political stability, coupled with the potential for economic reforms, has positioned India favorably on the global investment map. This positive perception is crucial for attracting foreign investments, which play a vital role in driving economic growth and development. The immediate aftermath of the exit polls witnessed a remarkable rally in the Indian stock market. Benchmark indices, the Nifty 50 and the Sensex, surged to unprecedented levels, reflecting the jubilant mood among investors. This surge was primarily driven by the expectation of a stable government and its potential to implement business-friendly policies. The market's positive reaction underscored the strong correlation between political stability and investor confidence. The Nifty 50, comprising 50 of the largest and most actively traded stocks on the National Stock Exchange, NSE, witnessed a significant jump. The index, a key indicator of the Indian equity market's performance, reached record highs, signaling a bullish sentiment among investors. This surge in the Nifty 50 was mirrored by a similar uptrend in the Sensex, the benchmark index of the Bombay Stock Exchange, BSE. The Sensex, consisting of 30 well-established and financially sound companies, also touched new milestones, reflecting the broad-based rally across sectors. This synchronized movement of both indices highlighted the widespread optimism and the market's positive expectations from the new government. The sharp rise in these indices not only signaled a potential bull run, but also attracted global attention to India's resurgent market. The impressive performance of the Nifty 50 and the Sensex in the aftermath of the exit polls showcased the Indian stock market's responsiveness to political developments. This surge in market indices was not merely a knee-jerk reaction, it represented a deeper belief in the potential of a stable government to steer economic growth and implement reforms. This positive sentiment, reflected in the market's performance, set the stage for a potentially long-term bull run. The post-election market rally was not merely driven by speculative trading, but was underpinned by a shift in investor sentiment. Domestic institutional investors, DIIs, often seen as a bellwether of local sentiment, were among the largest buyers in the market. Their increased participation signaled a renewed confidence in India's growth story. This shift in DII behavior, from cautious to optimistic, played a crucial role in propelling the market rally. Foreign institutional investors, FIIs, who had been net sellers in the months leading up to the elections, also reversed their stance. Encouraged by the prospects of political stability and economic reforms, FIIs turned net buyers, injecting significant liquidity into the market. This influx of foreign capital, coupled with increased DII participation, fueled the upward momentum in stock prices. Market analysts attributed the rally to a combination of factors, including the expectation of policy continuity, infrastructure development, and a boost to private investment. The new government's focus on these areas was seen as crucial for reviving economic growth and creating a conducive environment for businesses to thrive. This positive outlook, shared by investors and analysts alike, further strengthened the market's upward trajectory. The surge in market indices was not limited to a few select stocks. It was a broad-based rally, with gains witnessed across various sectors. This indicated a widespread belief in the market's potential and the expectation of a positive spillover effect from the anticipated policy reforms. The active participation of both DIIs and FIIs, coupled with positive analyst forecasts, painted a picture of a market poised for further growth. Section 4. Riding the momentum. Sectors in focus. Certain sectors emerged as clear beneficiaries of the post-election market rally, outperforming the broader market. Infrastructure, a sector often seen as a key driver of economic growth, witnessed a significant surge in stock prices. Companies engaged in road construction, power generation, and transportation infrastructure benefited from the government's renewed focus on infrastructure development. The banking and financial services sector also experienced a notable rally, driven by expectations of increased credit growth and financial inclusion. A stable government was seen as crucial for maintaining a conducive environment for lending and borrowing, boosting the prospects of the financial sector. The surge in banking stocks reflected the market's confidence in the sector's ability to capitalize on the anticipated economic growth. The consumer discretionary sector, encompassing businesses that cater to non-essential consumer spending, also witnessed a positive trend. The expectation of increased disposable incomes and consumer confidence, fueled by the government's pro-growth policies, boosted the outlook for this sector. Companies involved in retail, automobiles, and entertainment experienced a surge in stock prices. Renewable energy emerged as another sector that garnered significant investor interest. The government's commitment to sustainable development and its focus on increasing the share of renewable energy in the country's energy mix boosted the prospects of this sector. Companies involved in solar power, wind energy, and other renewable energy sources witnessed a surge in their stock prices, reflecting the market's positive outlook. Section 5. Expert Outlook. Navigating the road ahead. Market experts, while acknowledging the positive sentiment, advise investors to remain cautiously optimistic. While the long-term outlook for the Indian economy remains positive, global economic headwinds and potential policy hiccups could introduce volatility in the short term. Investors are urged to adopt a balanced approach, focusing on companies with strong fundamentals and a proven track record. The consensus among experts is that the Indian stock market is in a strong position to continue its upward trajectory. Factors such as a young demographic, increasing urbanization, and a growing middle class are seen as key drivers of long-term economic growth. These positive fundamentals, coupled with the government's focus on structural reforms, are expected to create a favorable environment for businesses and investors alike. However, experts also caution against complacency, emphasizing the importance of carefully evaluating individual stocks and sectors. A thorough analysis of a company's financial performance, management quality, and growth prospects is essential before making investment decisions. Investors are advised to avoid herd mentality and make informed choices based on their risk appetite and investment goals. Navigating the Indian stock market requires a nuanced understanding of both domestic and global factors. While the current political stability and economic reforms provide a strong foundation for growth, investors must remain vigilant and adapt to changing market dynamics. A long-term perspective, coupled with a disciplined investment approach, is crucial for success in the Indian stock market. Section 6. India's market. A long-term perspective. The recent market rally, while significant, should be viewed within the larger context of India's economic journey. The country has witnessed remarkable economic transformation over the past few decades, evolving into one of the world's fastest-growing major economies. The stock market's performance, while subject to short-term fluctuations, has largely mirrored this upward trajectory. India's demographic dividend, with a large and young population, presents a significant opportunity for sustained economic growth. As more people enter the workforce and contribute to the economy, consumer spending is expected to rise, driving demand across various sectors. This demographic advantage, coupled with increasing urbanization and a growing middle class, bodes well for the long-term prospects of the Indian stock market. The government's continued focus on structural reforms, such as simplifying the tax system, improving infrastructure, and promoting ease of doing business, is expected to further enhance India's attractiveness as an investment destination. These reforms, aimed at creating a more conducive environment for businesses to thrive, are crucial for attracting both domestic and foreign investments. While the Indian stock market may experience periods of volatility, its long-term growth potential remains intact. Investors with a long-term horizon and a willingness to navigate short-term fluctuations are well positioned to benefit from India's economic growth story. As the country continues its journey towards becoming a global economic powerhouse, the stock market is expected to play a pivotal role in this transformation.